Hi guys, Harry Yotis here, professional trader for 20 years now. Started my career in 2005 and still alive and kicking in 2026. Okay, today, theme of the day, pressure. Pressure everywhere. Today we're looking at the picture of the S&P 500 right here, and today's date is the 24th of June, a Wednesday, okay? And we're talking about a lot of pressure in the market, from pressure in the precious metals, in oil, in the market. And are we feeling pressure in the semiconductors? Well, we'll get there. We'll talk about that. We'll talk about what pressure means and how we should navigate it as traders going forward. Okay, so first of all, we always talk about the technical picture. Let's bring up the moving averages. Guys, we're right at the 50. This is a buying point. Okay, maybe we undercut it, maybe we don't. Who knows? But so far, we're right here at the 50. Still bullish. Okay, still bullish. So I'm impressed with the strength of this market despite the extreme negative sentiment, because look at the sentiment. We're right on the cusp of extreme fear. Remember a couple of weeks ago, I said as we're going down here on Wednesday, we got to fear, but we never got to extreme fear, and then the market ripped and we thought we're going to new highs. Well, I was skeptical of that because I said we never really reached extreme fear, so we didn't really have that washout that I was looking at to fuel another move higher. Okay, we might get that now. We might get this washout going forward. I don't know how long it lasts because we're already at extreme fear. I mean, on the border of extreme fear and fear. We might have to drop to, I don't know where it goes for it to drop to extreme fear. We might have to undercut this 725 gap fill. Okay. I would love that. Okay. I would love for that to happen. I don't know if it does. Okay. Because right now, the bears here had a good like lower high, and they're feasting a bit, but I don't think, I'm still long. I don't think this market is going to crash. I hope it goes down to maybe 720-ish, undercuts this low. I would love it. Love it. It would really put a lot of like extreme fear in the game, okay? Because now we have, look, everything is fear, and extreme fear, breadth, fear, except volatility is not above 25, okay? But everything else is extreme fear. We might get that volatility. Look, if you look at the VIX, it's still like around 1820. We might get that volatility spike to 25-ish, around the 23 to 28 level, if SPY starts going lower. Okay, so I don't know if that happens. We don't know what that happens. It's a toss-up, because what we could have is a sideways pattern, like a wedge type pattern, which would be bullish to me. Okay, we might go higher, lower, and wedge here. Okay, before probably ripping higher. So I'm still very bullish. I still think this market is strong. I just would love if it undercuts and goes below. Okay, we're getting our wish. We get exactly what we want. We're feeling the pressure. Okay, so let's talk about what I mean by the pressure right now. Okay, there is one sector right now that is in capitulation mode, in extreme fear mode, like real extreme fear. And that sector is gold and silver, precious metals. Look at that. Okay, we were going down here. Okay, going down here, and then we got this move up. Okay, but we were not really at extremes. Okay, we just got to the oversold levels, but not so much. And we just really had an oversold bounce before the negative pattern is still in place. And if you recall, we're still underneath the 200-day moving average in blue. Perfect. This is perfect to get everybody short in the space. Okay, and here, if you look, let's look at a technical reason. This flush is beautiful. Okay, I started accumulating. Remember, I'm accumulating. As it's falling, I'm accumulating because we were at extreme lows everywhere in sentiment and breadth and everything, okay? This is how the market bottoms. This is how the gold market bottoms. Look here, we have a lower low and a higher low here, okay? The price went to new lows, whereas the MACD did not. The RSI did not. So this is positive divergence. We have at least that. We have that in the 15-minute chart as well, okay? Look, the price action, I don't know if you can see it. The price action actually did go lower here, dip in the middle of the day. Around 2 o'clock, it did dip below this price. And look, massive positive divergence. Okay, it could even go lower, and this will dip and still make a higher high. Okay, we could even undercut the low of 3963. Okay, maybe we'll get to 3900. That would be great. Okay, I just don't know where it ends. Let's go back to the day. Okay, so we're getting extreme pressure on the gold space. It's the same with silver. I don't even have to go over it. Same with silver. Look at that. Okay, extreme moves. Okay, this one hasn't had negative divergence. This is still, we didn't get to the extreme level. It's on the silver, it's at $55, the next level, right here. We could get that very easy, okay? Now, why is gold like this? Okay, it's basically because everybody gives the narrative that it's real rates. Okay, we saw the US 10-year, and why I'm skeptical of that. We saw the US 10-year. Look, the US 10-year was going higher, but then it's been going lower for the past couple of times. Okay, but that's not the real rate. That's just the US 10-year. Okay, so in order to get the real rates, let's go to the Treasury Department, and these are the real rates, okay, daily Treasury rates, and these are the daily Treasury par real yield curve rates. Okay, and you have the expiries on the top 5-year, 7-year, 10-year, 20-year, 30-year Treasuries. And the dates here on the left. You can see the 10-year Treasury, which I like to look at, went from 207 in June all the way to 223. That's a big move. It's even bigger move here on the 5-year. Okay, 164 all the way to 198. It's going lower from 203, but now down today. Even though the real yields are down today, everywhere across the board, gold went down as well. Okay, it's flushing. It's in capitulation mode. You don't know where it's going to end. Okay, and these real yields, to put them in perspective, okay, if you go to the Fred database, it's the same thing as the real yield, the 10-year real interest rate, which is this middle one here, which I like to look at. It went from 207 to 223. Okay, so if you look at the real yield, we'll blow it up. This is over time. This is from 1985 to 2026. Okay, so let's just blow up this level right here. As you can see, throughout this whole time, okay, because the one thing that gold does react to is real yields. Okay, but remember, it doesn't react. It reacts to what real yields will be like in 6 months. Okay, so look, for all of 2024, real yields have been going up and down, stuck at high levels. Okay, and yes, when real yields go up, the price of gold tends to go down, and when they go down, the price of gold tends to go up. But it's the magnitude that matters, because as you know, from 2024 and 2025, okay, even though 2025 the real yields were going down, but in 2024 they were going up, down, up, down, up, down. And look what happened in gold. Okay, in gold, we know that in 2024 the market was basically going up here. This is this is gold, and this is 2024. Okay, generally going up here from the 2024 breakout all the way here. Okay, right here in the breakout, forget my annotations. I like to look at that. I like to keep them on. So from all of 2024, it's been going up, even though the real yield went from like what, 2,000 to 2,500. Okay, it goes up and down, but the magnitude of the up moves were higher than the magnitude of the down moves. So you had a consistently upward trending stock or gold from 2,000 to 5,000. Throughout this whole time, real yields are basically flat, stuck between 1.5 and 2, 1.5 and 2. Okay, so yeah, it does affect it, but there's other factors going on. And yes, we have to look at real yields. But remember, we're approaching here. It's delayed here. The real yield, it says it's 1.89, but it's actually higher. It's 2.2. We looked at here, and it's actually 2.23. So we are going above it. We are going above this level. Okay, so if we get a 5-year, 10-year max, let's go for 10. Look, we are going above this plateau level. So look like it's breaking out. Okay, but this is when that's what I mean by pressure. We're feeling the pressure of gold going down. Okay, feeling it, even though gold it's at 4,000, it's near highs. Okay, so the pressure is there, the capitulation is there. We also have the Fed Watch tool. That these are the Fed Watch from 2026. We have a rate hike here, 40% chance, 2 rate hikes. So basically, 2 rate hikes are priced in already for 2026. Okay, so you have all that pressure in gold being shown right here, despite the fact that in the past couple of days, the real yields it's going down. Okay, so you have a lot of pressure in gold, and this is why I'm buying. It's people are buying today's move. I mentioned I don't think Warsh is going to be that hawkish. They're pricing in 2 rate hikes, and it's if it's going to destroy the whole market. Okay, so it's very, very crazy. I don't think that Warsh is going to be that. I mean, they said the same thing about Powell when he came in. Okay, he's just going to do exactly what every Fed chair has done, despite the small differences. Okay, so it's crazy, it's tough, it's very, very difficult. There's a lot of pressure. Nobody wants to buy, but I'm accumulating. Okay, so that's pressure on gold. Let's go, but remember the rates. Even though the 10-year rates were normal, the real yields were going up, but not as bad as this. I mean, real yields should kill the market too, because if the Fed goes into a rate hiking cycle, we're going to get 2022 again. We're going to get the market where It tanks hard for everywhere. But no, SPY is pretty much high at the highs. Okay, so I like this gold move, but I really think the big move for gold, what's really affecting gold recently, is the dollar. This is the Dixie. Okay, it broke up the past couple of days above this long sideways channel, and it's going into the wrong direction if you're a gold bull. Okay, but it's getting into the overbought level. So this could be like peek your head above the water before going down again. We don't know. Okay, but this is pressure. This is what's adding to it. A strong dollar is adding to a weak gold space. Okay, it doesn't have to, but they're generally negatively correlated. Okay, so who knows how high the dollar goes? I don't think it goes that high. Okay, I think this is building up pressure. Okay, and I think the market is really positioned on a very hawkish wash. Okay, and I don't think that's going to play out. Okay, so that's it. That's it for my thesis for gold. Okay, that's where one pressure gold, and you see the entire pressure on SPY is so muted. It's not even 3-4% from highs. Okay, so the pressure on SPY is there. I just think that the bears are going to get killed here. We saw how and this is like we're almost at extreme fear. Okay, and we're just basically 3% from highs, not even 4, not 4. I don't think we're 4. Maybe 2 to 3% from highs and almost exhibiting extreme fear. I hope it undercuts here so we get it to extreme fear. It'll be a beautiful buy point, and I'm waiting for that. Okay, so that's pressure on the downside. So that's why I'm very positive this market. Okay, we saw the pressure with the Dixie going up. We saw the pressure with the real yield going up on gold, and how I want to fade it. Let's talk about the positive here, pressure on oil. Okay, with this market going down, we said that once it broke this neckline on U.S. oil, we're going to go down and revisit the bottom here, the breakout point of $65 a barrel, and I think we go even lower because they printed. I don't like to say printed, but they've drilled and flooded the market with oil in every which way you can. If a war can get oil to $150 a barrel, let alone 200, okay, peace is going to really tank it. This space is very bearish as far as I'm concerned, and I think it goes much lower. Okay, so maybe technically we're going overbought. Okay, we might hit 65, get really extreme oversold, bounce up, and then really break it up, break down again. I just don't know how the pattern is, but I know that fundamentally speaking, this is a very bearish pattern, very bearish fundamentals for oil, and I think we go lower over time. And my two oilish shorts are printing. Okay, and they will continue to do so. I have no worries on that regard. Okay, and the other big news today is Moo earnings. Okay, Micron had earnings today. What did they do? They beat. Okay, they were expecting $20 on the EPS and $35 billion on the revenues, and they got it. Okay, they beat the revenues on both counts. You can put more events here. You can see here, big earnings beat. The entire chip sector is cheering. Okay, you have other stocks going up. So this is going to lift the market up tomorrow, which is why I don't think it's going to. We have to see what's going on for tomorrow, but this is going to really lift the market. It's at highs. Okay, I shorted the 800 mu put, and it's going to expire worthless. It expires on Friday. It's going to expire worthless. So that's good for my mu, but it's not good for my Intel short, because now Intel after market is trading at 137. It's up $4 or $5. Okay, so this is another thing that I want to see. Very important to see how mu earnings affects the market tomorrow. Okay, I'm hoping that it's a muted response, that it maybe gets bid and doesn't really explode into new highs, because then we won't get that SPY smash that I want. Look, SPY is trading at 737. It closed at 733 after the market. So mu is pressuring it higher. Okay, I'm just hoping that, let's see what happens tomorrow. Tomorrow is what really matters. Look at mu and look at the whole tech sector and see where it opens. Okay, it could, if it's a muted response, if it just opens up maybe like 5%-ish, we're getting close to the end of this huge SMH run. Look, even SMH is at 638 with mu. It's not at highs. Okay, so we might get a little, lower high before it going lower, and we get more rotation out of this sector and into other sectors. Okay, and I'm hoping that's what will happen as the market goes down and breaks this level. Okay, it won't be a death stroke. Okay, and again, we don't know where, like with gold, the capitulation with gold, we don't know where it ends. We thought it was here. Okay, we thought let's get rid of this thing for now. we thought the capitulation for gold was this down move here. Nope, even more. Okay, same with the SMH. We don't know where the capitulation moves, if it ever happens. Okay, or we don't know with the SPY, if the capitulation move happens. If capitulation means we're getting into extreme fear and you can feel it. Okay, we're seeing like puts being bought. We're already seeing a lot of puts being bought, way more puts being bought here, which shows that we are not at highs. When you have such fear at the high in the market, there is no euphoria. Okay, so guys, this has been a long video because it's important. We have to talk about the pressure. We have to talk about the new earnings and how I'm positioned going forward, and how you should be positioned going forward. Because look at how Mu reacts, and look how the market reacts to Mu. Okay, very, very important. We'll talk about it tomorrow. Later, guys.